Welcome back. Now, Tech Mahindra is the top Nifty loser today. It's down close to about 3% now. One of the reasons is the miss on the top line. The company reported a revenue growth of just 0.2% in constant currency terms quarter on quarter, lower than estimates, and compare it to peers and you would see that it's right at the bottom of the pyramid. Peers like Infosys, TCS had a revenue growth of more than 2.5%. HCL Tech was closer to 5%. So Tech Mahindra's top line missed expectations, partly because some of their big clients squeezed their budgets, furloughs, and the commentary in the call was also fairly cautious. So the stock is under pressure, right? This is the comparison versus peers, and we pull up the comparison versus estimates. We'll pull up the comparison versus peers as well. But here I want to present a contra view, which is coming in from Ambit, and they're saying that Tech Mahindra is a tactical play on margin recovery. Now, Tech Mahindra's margins at 12% is sharply lower than what it was a couple of quarters ago and much lower than peers like Infi TCS, whose margins are above 20%. So Tech Mahindra's margins are much weaker than peers. So Ambit believes that this is a tactical play on margin recovery. And they also say that valuations are reasonable. It's trading at a 30 to 40% discount to larger peers at about 16.5 times forward multiple. The scope for margin improvement is: one, the utilization level is still below peak levels by 300 basis points. Its subcontracting cost is about 14.4%. The reason their subcontracting cost was high because the company's attrition was high. Now that attrition is cooling down, they have to rely less on third-party people that they hire just to complete the job on site. These subcontracting costs were very high for Tech Mahindra, higher than peers, and they believe this number could come down. They also have a lower offshore revenue mix. Offshore basically means work that can be done in India. If they increase the work that can be done in India, it is positive for margins because the costs in India are lower versus, say, a US or Europe. And third, under-leveraged employee pyramidization, which basically means you hire more at the bottom end, the fresher. And they also say that in the past, when Tech Mahindra's margins came under severe pressure, they're going back a couple of years, the company was very aggressive on cost rationalization, optimization, employee salaries were cut or they didn't give wage hikes to boost their margins. So they're saying even that is a possibility, that the company, to spruce up margins from current levels, could be very aggressive on cost optimization. Also on the top line, Ambit is saying that whenever there is a big transition in the communication tech, we're moving from 4G to 5G, there is a lot of work which needs to be done on networks. So in the past, whenever we've had these communication transitions, Tech Mahindra's revenues have actually done very well. And also, final point, they're saying the current consensus expectations is only baking in about a 5 to 7% revenue growth, which they're saying is adequately factoring in any kind of demand moderation, because they are already saying that consensus is expecting a pretty poor performance from Tech Mahindra. There you have 5% growth for FY24 and just 7% for FY25. So Ambit has this contra call coming in on Tech Mahindra.
Okay, that's an interesting one, a bit of an outlier call. Stock still under pressure. By the way, 20% Adani Enterprises, so gradually inching higher. Today is the last day. Let's see, still several hours to go. But 20% is the total subscription to that FPO, at least as of now. Interesting move on a couple of power stocks. Big flip up in the likes of Power Grid and NTPC. Maybe this is finally a little bit of the budget excitement, the pre-budget rally, so to speak, that is playing out. It's been completely elusive throughout the month of January. But some of these stocks, the PSUs from the power space, they are looking a little excited. Quick break on that note. On the other side,